think it is recording. Looks like it. No, recording pin. Wait, okay. Now, okay. Okay, so let's kind of review what we did on Thursday real quick. Let's go to the answers that Mike gave us to our inquiries. And you don't even have to pull this up if you don't want to. I'm going to pull it up. And we're going to have it on the big screen. Okay. All right. So just to remind us, on Thursday, we did a lot, right? We did do a lot on Thursday. So we were engaged by WebWorks to perform a review of their financial statements from 2016 because they're hoping to get a loan from the bank, and the bank is requiring reviewed financial statements. Review is lesser than an audit, lesser in scope, lesser in assurance, but basically the steps in a review are to familiarize yourself with the client and the industry, which we didn't exactly do that, but that would typically you'd want to do that. Then you would want to set an expectation for what you would expect to see in the financial statements. And like we said on Thursday, typically that would be prior year financial statements, okay, if those are available, and perhaps even financial statements that are industry averages, if you have those. We did not, so we chose to use the financial statements that were submitted with their business plan in 2015. So these were the projected financial statements for 2016. And so we use those to do our analytical procedures. So analytical procedures are simply different ways that we look at the financial statements to see if there is anything that just doesn't make sense, that seems out of line, that seems very different than what was expected, that we don't understand, anything that we have a question about. Because what we're trying to do is to assure ourselves that the financial statements are in conformance with GAAP, that there are no material modifications that need to be made to them to bring them into conformance with GAAP. Because that's what we're asserting in our review opinion, is that based on our review, they are in conformance with GAAP. So you guys did some work on Excel to analyze the 2016 actual statements and the 2016 budgeted statements. And based on those analytical procedures that you did, you had some questions for Mr. Jackson, because there were some things that didn't seem quite right, that didn't make sense, that we weren't sure about. So 3 of the questions that we asked were about the accruals, and those are the things that I wanted you to look at for homework. And I know this is difficult, guys. You got to get back into practice with this, so don't stress. We're absolutely gonna go over those. But it's really good for your mind to try to make yourself think through those accounting type questions. So we noticed that there were no shop supplies remaining on the balance sheet, and there were in the budget. So we asked if perhaps he forgot to accrue shop supplies. There were also no wages payable and no accrued liabilities for utilities on the actual financial statement, and there were on the budgeted financial statement. And oftentimes those adjusting entries, they could be forgotten. They just forget to accrue those things. So we asked about that. And then we also asked about insurance, because there was a significant amount of prepaid insurance on the balance sheet, but no insurance expense and on the income statement. And so we were concerned that he might have forgotten to expense the portion that had been used up throughout the year. So those are the things that you guys looked at. So today, the 2 that we are going to tackle are the startup cost and the licensing agreement. Okay, so on the balance sheet were 2 assets that are fairly significant for WebWorks given the size of the company. The first was the startup cost, which was $16,000 net. Originally $20,000, but he amortized it or depreciated it. So I'm sorry, guys, I keep using that word. I want to make sure that you remember it from 20 to 11. So amortization and that's a hard word to say, amortization, is the same thing as depreciation, except that's when we talk about intangible assets, we typically talk about amortization and not depreciation. So depreciation is spreading the cost of an asset, of a fixed asset, like a piece of equipment, over its life. Amortization is doing the exact same thing for an intangible asset. And so we use that term instead, okay? So Mike had amortized the startup cost over 5 years, and unfortunately he didn't give us a very good reason. He just said that was what they were using for all their other assets, so we went with it for this one. So 20,000 divided by 5 years would be 4,000 each year. So 20,000 minus 4,000 gives us the 16,000 that we see on the balance sheet. And so we asked about what those startup costs were, and he said that they had trained their employees in January for $20,000. They wanted them to be totally up to speed on all of WebWorks equipment and everything that they were doing, and they wanted them to be the best they could be for their client. So our concern, though, is that we don't really know if training costs qualify to be an asset. If they are the startup costs, that he is, that those actually can be recorded as an asset, and they are 10% of WebWorks total assets, so they're pretty significant. They only have 15,000 in net income for the year. So should we say that this does not qualify as an asset, we may very well be taking them into a net loss, or asking them to book a journal entry that's going to take them into a net loss. So that's pretty significant, and we need to get this right. Okay, so we are going to do some research to find out if training costs are an asset or an expense. So we are going to go back to Connect here. And in the middle of the page, sort of next to the inquiries year 1, you should now see a document that says research on training cost. If you don't see it, make sure you refresh. And please go ahead and open that. And that is going to be our the start of our memo for what we're going to write up on training costs. So this should look familiar. It should look like the research memo that we did for Best Buys last week. And I've already, okay, mine's not opening. I sometimes have trouble with Word on here. I'm not really sure why. Let's try again. There we go. Okay. And I will. So it's right around January 13th of 2017 while we're doing this in our pretend time. And let me go ahead and share this screen because I am going to type on it a little bit. Okay. So go ahead and put your name in the prepared by there. And this is the part, so this is what I recommend you have typed up before you even begin thinking about going in and doing research. Okay, so, one of the things that I want to stress is we don't ever just go into the codification and just start researching, unless it's something, it's something really tiny, I guess, but it's so much better to get our thoughts down on paper before we go in so that we don't waste our time. Like, I don't want to spend all day on the codification, to be honest, guys. I want to get in there, find what I need, and get out of it, okay? So in order to do that, I really need to be focused, and I need to know what my search parameters are going to be. So we would always put down who our client is, and give it a subject. So again, if somebody else is searching later on, years later, WebWorks gets sued, the lawyer subpoenas all of these documents, they can find exactly where we did our research to make sure that we did, we can prove that we did it correctly. So background is basically what we've just been saying, that WebWorks is privately held web services company starting on January 1st of 2016. They're seeking a loan from Southeast National Bank to finance the purchase of a new equipment, and the bank requires reviewed financial statements in conformance with GAAP. Okay, so now we get to the more specific detail. During 2016, the company expended $20,000 in training its employees. They're currently recording these costs as an asset and amortizing them over 5 years. and they are a material portion of WebWorks' total assets. So the question then is WebWorks allowed under GAAP to record the cost of training employees as an asset? That's a pretty basic summary of the question. And if they can record it as an asset, what is the proper amortization treatment? So is Mike correct in amortizing them over 5 years? So the last thing we want to do before we dive into the codification is to list out the plausible alternatives. And what this does is it helps us to focus in. So we develop an expectation before we even dive into the research. So what's one possible thing that we could find about the training costs in the research that they can be recorded as what? What's one possible recording for these training costs?
Expense.
Okay, so one possibility is they can't be recorded as an asset. They have to be expensed as incurred. Okay, so that's one possibility. What's another one?
Can we supply or?
Well, they could be an asset, like what Mike did. Maybe Mike did it correctly, right? So they could be an asset, and maybe they don't have to be amortized. That's a possibility. And then the other possibility is they're an asset, they do have to be amortized. So the spectrum of possibilities would be one possibility is that the training costs can be recorded as an asset. With no amortization. I mean, that's really unlikely, but we'll put it down as a possibility with no amortization required. They could also be required to be expensed as incurred. Third, middle ground would be recorded as an asset, but expensed through amortization over time. Okay, so our spectrum is we can record them as an asset, we don't have to amortize them. We record them as an expense totally. In the middle, we record them as an asset, but we have to expense them over time through amortization. Do you have a question, Matthias?
Yes. Can you repeat what amortization is?
Yes. Okay, so do you remember depreciation from 2211? Okay, so the idea of depreciation is we have this table, and the table's not going to last us forever. Although, honestly, the table's been here like 20 years, I have to say. Okay. These tables have been here way longer than that. But anyway, they're not going to last forever. So in depreciation, we expense a little bit of the table over time. We spread the cost of the asset over time, the time that it's going to be used, right? Same thing with amortization. Okay, so we have what's called an intangible asset, which is an asset that can't be, you can't put your hands on it, but it's still an asset. For instance, a trademark or a patent would be an example of an intangible asset. Those also have a life that's not forever. And so we have to expense them just like we do, excuse me, haircut in my mask is driving me nuts.
You
okay.
can also sell them.
Sure, you could. And you could sell a table too. And when you do that, you stop depreciating it because it's not your asset anymore, right? So trademark and a patent, you also expense over time. Instead of calling it depreciation, we just use the word amortization. So amortization and depreciation are basically the same thing. Depreciation is for assets that I can touch, like my table, and amortization is for assets that I can't physically touch, like a patent. Okay, that's it. That's the only difference. Does that make sense?
Yes.
Okay, all right. So the training cost would be an intangible asset because I can't go out and, if they're an asset, I can't touch those either. So they'd be like a trademark or a patent to me. Okay, The question is if they are actually an asset. And that's what we're getting ready to find out. Okay. So I'm going to minimize this for a second. And I'm going to go back to Connect, and we're going to get on to the accounting standards codification. So hopefully you've got it all saved on here. If not, just type in the username and password like we have done in the past. So we're going to go to the FASB user login. If you have your username and password saved in, you can just enter them. If not, just please go ahead and enter them from the page. The Connect page has both the username and the password, and you can enter them. And then we're going to click Submit. Choose the FASB Accounting Standards Codification. And we're there. Okay, and we always have to accept our license agreement, which we're going to be looking up in just a minute. So I wonder if that's an asset for FASB. Okay, let me share my screen with the recording. All right. So, what we did last time when we were dealing with the inventory was we went over here to assets, and there is an intangibles. If you look down on the drop-down menu, there is intangibles there. But the problem is that if it's not an asset, we're not going to find it in there. Okay. But just because we don't find it doesn't mean it's not an asset. They don't list every single potential asset on this drop-down. So in this particular case, that's not going to be very useful to me. Okay. Another thing that I can do is use my search bar, and we are going to do that in just a little bit. But where I want to go first, we talked about it the other day, is the concepts statements. Okay, so they're not included in the codification. They're off to this other sources by themselves. So we talked about the fact that when we talked about FASB, and we talked about the Committee on Accounting Procedure, and we talked about the Accounting Principles Board, we talked about the fact that one of the reasons that the CAP and the APB failed was they never set a framework for accounting. So they didn't really define an asset. They didn't define a liability. They didn't say what the financial statements should include and all that sort of stuff. FASB did not make that mistake. The first thing they did when they were formed in 1973 was to set a framework for setting accounting standards. And the concept statements are that framework. So if you ever want to know the definition of a particular accounting term like asset or liability, you go to the concept statements, and you will find it in there. And it's been changed over the years, okay? But you should still be able to find the most current versions. So personally, if I were doing this, I would want to start with what is the definition of an asset, okay? Because maybe that'll help us decide if training costs meet that definition. So I'm going to click on concept statements. And here are the different ones. Okay, so you can see that concept statements 1, 2, and 3 have all been superseded. So when you see that word superseded, what that means is they've been replaced. They're no longer GAAP. FASB has replaced them with something else. So you don't want to use those. If you wanted to see what the history was, you could certainly go back and read them, but you don't want to use them as GAAP. Anytime you see something's been superseded, it's no longer GAAP. It's not valid anymore. Okay, so elements of the financial statements was concept statement number 3. An asset would be an element of a financial statement. So basically what we need is the more current version. And if you look up here to concept statement number 6, you'll see that's also elements of the financial statements, a replacement of FASB concept statement number 3, okay? So that's the one that we're going to want to use. And I would, personally, I would say, unless there's a particular issue, a reason you need to use as issued, you'd want to do it as amended, because that should be your most current one, is the one that was changed at some point. Oops, sorry, I'm on the wrong one. So we're going to choose concept statement number 6 as amended.
How often do they change those?
These, not very often. Yeah, these are, there has to be a really good reason to change one of these, and they don't do it real often. Okay. So that's tiny. Let's see if there it is up there, actually. All right, so even we don't even have to dig very far on this, like, what is this, page 2. It gives us the definition of an asset right there. Okay, I'm sorry, I'm like having trouble. Let's try this. There we go. Okay, there's the definition of an asset. Assets are probable future economic benefits obtained or controlled by a particular entity as a result of past transactions or events. All right. I like to do this on the board, and so I'm going to leave the computer for whoever's watching this later on. I'm going to leave the computer, but I'm going to try to talk really loud so that you can hear me. But basically, all I'm going to do is we're breaking out this definition. So the definition you have, I'm writing it on the board basically. Okay. So what we need to decide then, guys, is whether training costs meets that definition. All right. So I'm going to put the first one up. Assets are probable future economic benefits. Really, there's 3 parts to the definition. This is the first part. Probable future economic benefits. Okay, that's part 1. All right. Part 2 is obtained or controlled by an entity. And part 3 is based on a past transaction. Now, you may disagree with the definition. That's fine. But that is the definition, okay? So this is what FASB says an asset is. And since FASB is the one who gets to set the standards, we have to go with it. So let's think about what our particular situation is one more time. So WebWorks paid $20,000 to train their employees so that they could provide better services for their clients. Okay, that's what we're looking at. So we have to determine that meet the definition of part 1. Should the training cost provide probable future economic benefit to WebWorks? What do you think?
Yes.
Yeah, I would think so. I mean, why would they spend the $20,000 to train the employees if they didn't expect that it was going to produce revenues in the future, right? So the idea is that they did a good job of training the employees provide superior service, we keep the clients we have and hopefully add new clients, right? So yes, we should be okay. All right, I'm going to skip number 2 for a second because number 3 is pretty easy. Is it based on a past transaction? Have they paid the $20,000?
Yes.
Yeah, they paid that a long time ago, okay, because they did this training in January. So they've already paid the $20,000. It is based on a past transaction. Now, here's the kicker. Is it obtained or controlled by WebWorks?
No.
Okay, why, Jack?
Because technically the entity doesn't own the training, it's the individual employee. So if the employee left the company, then they no longer have that asset.
All right, I like that.
What do you mean by obtain or control?
Yeah, so controlled means that it belongs to WebWorks and they have the ability to use it in any way that they see fit. Okay? And so what Jack was saying was he does not think that WebWorks controls the training cost because it resides within the employees and the employees have the freedom to leave. Do you see what I'm saying?
Yes.
Okay. All right. So Jack, that was extremely well explained. Would anybody like to take the other side? That WebWorks does control the training. Okay, what if the employees have signed employment contracts that they're going to stay? Okay, hold on one second. You go ahead.
Maybe for a specific time.
For a specific time, okay.
When they say entity, would like an employee be considered an entity?
Well, in this case, it's the entity that actually is putting the asset on their books.
Okay.
Okay, so it would be WebWorks. Yeah. Okay, so perhaps we get them to sign an employment contract for a year, right? Okay, I'm gonna play devil's advocate on that one. Just because they sign a contract, do they have to stay? They can still leave, right? So, I mean, people walk out of contracts all the time, right? I mean, now we could maybe sue or something, I suppose, but that's going to cost us more money if we have to do that. So even if we have contracts, even if we have what's called a non-compete clause, which basically means the employee signs something that says, I won't go to a competitor. If I leave WebWorks, I won't go to a competitor and work for 2 or 3 years or whatever it is. Even if we have that, the truth is that the training resides within the minds of the employees, and WebWorks cannot control the employees. They can leave. They are free to leave. Okay? So I think I've never had a group that agreed so quickly. Like everybody agreed. Usually there's somebody who wants to argue about it. But I think we have to acknowledge that WebWorks does not control the training, okay, because they can't control the employees. And because of that, it does not meet the definition of an asset. You have to, let me say that, you have to meet all 3 parts. It's not a majority rules in this case, okay? You must meet all 3 of these in order to be considered an asset. And so since the training does not have this second one, it really should not be an asset. Now, that being said, it's always possible that FASB violates its own rules. That does happen. So we should go ahead and look up training costs specifically just to make sure that in this particular case, FASB didn't say, but we still think training costs should be recorded as an asset, and here's why, okay? So it definitely doesn't meet the definition, but it's always possible that FASB has put out a specific rule for training, so it's not a bad idea to just do the search just to make sure, okay? All right. So
What if,
yeah, go ahead.
The ex-accountant that we are working with consider this as an asset? We just
He did consider it. Like Mike did record it as an asset. So if we believe that it's not an asset, we are going to have to ask them to make a correcting entry. Okay. They do not have to do it, but if they don't do it, we cannot give them a clean review opinion because this is clearly material. It's 10% of their assets. It's going to take them into a net loss. So it's material. It certainly would have an impact on the bank's decision. So if they refuse to make the change that we're going to require them to make, we simply would have to say we're going to have to give you an adverse review opinion. We can't say that your statements are in conformity with GAAP because they're not. Okay.
So even if the company took this as an asset because at that time it accomplished it, like it met the 3 requirements, they still have to accrue this as an expense.
But it didn't. Even in the very beginning, it didn't meet the definition because they were never truly in control of it. Okay, as soon as they provided the training and it went into the minds of the employees, I mean, literally all the employees could have walked out that day and said, we quit, we're going to your competitor, right? I mean, they could have. It's unlikely.
Okay, so.
But they could have. So they never, ever really had an asset here.
Okay, there are just some expenses that sometimes are considered as an asset, right?
Well, in this case, it was just a mistake. Like he shouldn't have recorded as an asset. It should have been expensed. Okay. And people make mistakes, right? I mean, it's not a, I mean, we had to think about it. You're going to find mistakes, and there are gray areas that you just have to deal with in accounting. This one I wouldn't really say is gray too much. I mean, I think we can pretty clearly say that. But there may be other things that happen where you are, I mean, like once you're up in a really top level in a public accounting firm, where you are going to be arguing with the client a bit about whether something should be expensed or recorded as an asset or whatever it is. It's not always, it's exactly like this and we must do it this way. Sometimes it's a negotiation about how something should be accounted for. Okay. All right, so let's go back to,
Can you have problems for doing that?
What do you mean?
Like replacing entries?
No. As long as, you know, that's what the review is for us to make sure that the statements are correct. So this is just going to be done internally on their books, and they're going to have to produce new financial statements for us to do our review on. I mean, that's why we do the review, is to catch things like this. They haven't provided them to anyone and said, these are our, you know, GAAP financial statements. That's why they hired us, was to help them to make sure that they were in conformity with GAAP. All right, so we are going to now go up to our little search box and let's just try training cost. And see if we can find anything, okay? All right, so we have internal use software. No, probably not what we're talking about. Revenue with contracts from customers. No, probably not. Okay, now this is not, this next one is still internal use software, which is not really what we're talking about, but do notice what it says. Internal and external training costs and maintenance costs during the post-implementation operation stage shall be expensed as incurred. So even though we're not going to rely on that one, it does give an example of where FASB specifically says training costs should be expensed as incurred. Let's see, financial services, probably not. Still in software. Software. All right, I'm going to go on. There's only there's only 24 results, so it's not going to kill us to look through all of them. I don't think we've gotten to one that really qualifies yet. So let's go to now page 2 over here. Let's see. Oh, I'm not sure I'm sharing on Teams anymore. No, I think maybe it is. Well, let me double check. It takes me a second to do this. Make sure that they can see what we're seeing. Okay, software, other expenses, startup cost. Oh, number 2 there on the second page. That sounds more like what we're dealing with. Now, this one's an example, cost incurred to construct an overseas plant, which obviously is not the exact same thing as what we're doing. But let's go ahead and click on it. And there may be something in here that will help us, okay? So we are dealing with startup cost. All right, so it sounds like exactly what it is. I mean, we're dealing with somebody who's starting up an operation. And so what do we do with costs that we have to, when we're starting up an operation, whether it be a new business or just a subsidiary of our business, what do we do with some of those costs is kind of what it looks like what this one's talking about. So, accounting for certain costs incurred in conjunction with startup activities, okay, are not covered by this subtopic. Okay, so it sounds like it's just telling us that not every cost is included in this. But it does say that in this example that training would be expensed. The following cost would be expensed as part of the overall startup. So that's encouraging. Is there anything? See, training cost once again. So it looks like training costs are included in this particular topic. Seeing if there is anything else. Okay, so give the examples that they're giving as of startup costs. An example is training costs, and it says that they should be expensed as incurred. So that's encouraging. It looks like FASB's following its own rule. These don't meet the definition of an asset, so we would not record them as an asset. Okay, so I do want to get to licensing agreement today as well. So instead of typing out the entire rest of the memo, I'm going to pull up the completed memo. We'll look through it and then I'll provide it for you. Okay, instead of, it'll take us 15 minutes to type it. So I'd like to use that time a little more productively than working on our keyboarding skills. So give me just a second to find it. Let's go here, classes, 3302, what works, year 4, no, we're in 3301, hello, 3301, what works, I don't even know what year it is, year 1, okay, training, there we go, let's see. Trying to make sure I get the right, that's the start. So this should be the final one. Awesome. Oh, that doesn't have the second. Oh yeah, there we go. Okay. So this has everything that we just did, guys. Let me share it and I will upload. I'm not going to take the time to upload it right now, but I'll do it after class. Okay. So basically, we got through the plausible alternatives, right? And then our solution would be that training costs do not meet the definition of an asset and thus must be expensed as incurred. We conducted our research using the FASB accounting standards codification on January 13th of 2017. We found concept statement number 6 that gave us the definition of an asset, and then also a topic 720, which is the one we were just on, that states that startup costs, including training costs, must be expensed as incurred. So I think it's pretty clear. This research will then give us the ability to go have the conversation with the client. Because what do you think? I mean, are they going to be happy that we're asking them to do this? Probably not. So we really do have to have our ducks in a row before we go in, because they may very well argue with us about this. And we need to be able to prove beyond the shadow of a doubt that this does not meet the definition of an asset and that according to GAAP, it has to be expensed. Okay, so I will get that memo posted so that you have it. And in the meantime, let's go ahead and look at the second piece, which is the licensing agreement. That was the second asset that we were unsure of. Okay, so I'm going to close that out. And I will make sure you have that. Okay. Let's go back to Connect for just a second. And pull up the second. So next to the research on training costs, you'll see research on licensing agreement. So go ahead and pull that one up, please. Okay, so I think we could do the same. I'm not going to type out the alternatives right now, guys. Again, interest of time, we're down to 20 minutes and I want to get the research done. I'm going to provide you with the final memo again, so you'll have it. Okay, but basically plausible alternatives are the same thing. So the licensing agreement, let me take the second to remind us what it is though. Okay, sorry about that. Okay, so according to Mike, prior to starting the company, Jake and Rachel purchased a license to use a software program. Same thing, guys, as if you were taking a graphic design class, you might have to purchase a license to use Adobe something. Adobe has a lot of different things, and I forget what you might be using for that one. But if you were taking photography, you might purchase a license to use Photoshop, right? So same thing. There's a particular software that Jake and Rachel thought would be very beneficial to WebWorks. And so they purchased a license to use that software. It also was $20,000, I believe. And the license is good for 5 years, so Mike is amortizing that one over 5 years, assuming that it's an asset. It makes sense that it would be amortized over the time period that they can use it for. Okay, so let's go back to our definition. We don't even have to go. We don't even have to go back to the concept statement. We already have it. So let's see if we agree that it meets the definition of the licensing agreement meets the definition of an asset. Okay, so keep in mind it's the right for WebWorks to use a certain piece of software that should benefit, Jake and Rachel believed would benefit the business, okay? Well, I guess I kind of gave you the first one, didn't I? So yeah, it should have probable future economic benefit. It wouldn't make any sense for them to spend $20,000 on a piece of software that's not going to benefit the company, okay? Obviously, if the owners believe that the software is going to be useful, then it should provide future economic benefit. Is it based on a past transaction?
Yes.
It is. They paid for it already. Okay. In fact, Jake and Rachel actually bought it with their own money before they even incorporated WebWorks. And then when WebWorks was incorporated, they traded the licensing agreement to WebWorks for common stock. So Jake and Rachel became owners of WebWorks by trading their right to the licensing agreement. Okay, so now belongs to WebWorks. So is it obtained or controlled by WebWorks?
Yeah.
It is. They pay for the right to use it for 5 years, and so they do have control over it because they have the right to use it for 5 years. Okay, so this one was a little easier, and it definitely meets the definition. We can always go in and just look at it if we want to, just to double check. Uh-oh, what happened to Teams? Come back, Teams. There you are. Is that the right one? Yes. Okay. So if we go up here to our search box, we can just put in licensing agreement or license or whatever you feel like you want to search. And just so you know, and this is just one of those things that it takes experience, you're really only going to find licensing agreement when you in the context of entertainment, guys. There's a lot of licensing that goes on for broadcasters, the right to broadcast certain shows and such. So that's really the only place you're going to find specific information about licensing agreements. And we can, again, since it does meet the definition of an asset, we can then extrapolate that to our situation. But we're not going to find specific guidance on this particular licensing agreement. Okay, so let's see. Okay, we can even just pull this first one up if we want to, because it basically says the capitalized cost of licensing agreements. Okay, capitalization. That is a word we are going to use a lot in here. Capitalization. What that means is to make something an asset. When we capitalize something, we make it an asset. Let me write that down. Okay, so when I say we capitalize that cost, that means we made that an asset. So licensing agreement, it sounds like it is an asset because FASB is assuming that we capitalized it and that we amortized it. It says the capitalized cost of licensing agreements shall be amortized based on the estimated number of future showings. So it's capitalized and then it's amortized. So it looks like Mr. Jackson did do the correct accounting for the licensing agreement. So let's pull that up real quick. I'll show you the memo, and I will also record the memo, give you the memo, sorry, on Connect. Okay. So our proposed solution would be that the licensing agreement should be reported as an asset because it met the definition and be amortized over its useful life of 5 years. Once again, we use the concept statement number 6 as well as topic 920, which was the one we were just in, which states that licensing agreements should be reported as assets as long as certain criteria are met. Okay? So it looks like we're cool on licensing agreement, not so cool on training cost. Okay, so I will give you those 2 memos so you have them. All right, so now I am going to show you our accounting system. So I gave you already had this, but you may not have had it any particular reason to open it. Well, no, I guess you probably did when you were thinking about your homework. But I gave you the year 1 transactions in a Word document. Okay. So these are all the transactions that happened to WebWorks in year 1. They are summarized, which means even things that happened multiple times, such as paying our employees, obviously happened multiple times. But I would I put them into like one summary entry typically, just to make it a little bit easier for us to look at. So these are all the transactions that happened to WebWorks. If you haven't had time to read through them, I would do that so that you can see exactly what occurred. Okay, these are their 3 contracts: Hall Enterprises, Cullen Company, and Rose Now. Those are the 3 contracts that they have currently. And then Mike also made some adjusting entries. He recorded the amortization of the startup cost and licensing agreement. He recorded depreciation on the shop equipment, and he recorded rent expense. And we'll be talking, I'm not going to talk about that today. We're going to be talking about that hopefully next time. If not next time, the time after that. Okay, so he records these into, let's go back to Connect for a second, the journal ledger. Now, I haven't had a chance to show you guys this, so we're going to spend the rest of our time today playing around with our journal ledger so that you can get familiar with it, because you're going to be using this a lot. And it may ask you to enable content and choose to do that. And the reason that you have to do that, guys, is it's got macros in it. Macros are Excel's version of coding. So it's macros are allow us to do certain things in Excel. It really ramps it up and allows us to do a lot more exciting things in Excel. And sometimes macros can be dangerous, so that's why your computer asks. But I promised you that this one's trustworthy. I've been using it for a long time. So if you notice, let me click on this one more time. This should be the last time I have to share. You'll notice that there are tabs down here at the bottom. Okay, so here's the journal. This is where we make journal entries. Then we have an asset ledger, a liabilities and owner's equity account ledger, and a revenue and expense ledger. Okay, so when you guys in 2211, you would do your journal and then you would post the journal entries to what? Do you guys remember what they were called? T accounts. Yes. Okay, so you did your journal entries and you posted them to T accounts. The ledgers are your T accounts, okay? So you're gonna love this because it automatically posts all of your journal entries into your ledger accounts, which are your T accounts. I'll show you in just a second. Now, also notice that each account gets its own number, and we are going to be using those numbers. That's called your, basically you would have a chart of accounts, and each account gets its own number. So our current assets are 100s. Ooh, I got to make a change. Guys, I need to change something in this. There's a mistake in here. I'm going to do that, and I'm going to repost it. So I will get rid of this one. Don't download this one and use this one. There's a mistake I should have caught earlier, and I will take care of that right after class. So anyway, our current assets are in the 100s typically. Our long-term assets are in the 200s. Liabilities current are in the 300s, 400s for my long terms, and then my revenues are 500s and my expenses are 600s. Basically, a few of my I shouldn't say all that because some of my expenses are 500s as well. So, but you can do your chart of accounts however you want. There's no particular rules. The company sets it up and decides what numbers they want to give their accounts, and they can give them anything they want. It's not like something universal that everybody has the exact same chart of accounts. So basically, what happens is we put a journal entry in. So here's where Jake and Rachel traded their licensing agreement for common stock in the company. So that's the very first thing that happened. Okay. And then Rachel's dad and Jake's two sisters purchased additional stock for cash. And that's this entry right here. Here's where they put the training cost. Uh-oh, that's the one we got to change. Okay. They prepaid rent on their office equipment, on their, and then, so they also own a they're also renting a building. Okay. In the building, they're doing work on people's websites and cybersecurity stuff and all that stuff. They do that in the part of the building called the shop. They call it the shop. They also, in the same building, have a separate space where Mike, the accountant, sits. They have an administrative assistant, and Jake and Rachel spend part of their time doing like office-y kind of stuff in the office. So they have, so when we talk about the shop and the office, which we will be a lot, I typically call this part of the room the shop and this part of the room the office because the shop is bigger. And so we can kind of think about this with the big desk as being the shop, and then the little side over there with the little desk, that's the office. So for homework, you're going to be doing some research for me. Do not freak out about it, all right? This is going to be your first time going into the accounting standards codification by yourself and trying to find how to account for something, all right? I just want you to try, and we're going to go over all of it in class. So I'm not going to leave you to your own devices to say, did I find the right thing or did I not? I don't know. We're absolutely going to go over it on Thursday. But I want you to go ahead and start getting your fingers dirty into the accounting standards codification. Start playing around with it, seeing what you can find. Can you write up a decent research memo? Let's get some practice doing that, okay? So for homework, you're going to be doing that. When we come back in on Thursday, we're going to look at the adjusting entries that you tried to do this weekend. Okay, I know we didn't get to them today, so we'll get to them Thursday. And then we're also going to do the adjusting entries that we need to do for the training and help them fix that because that's wrong. All right, so we're going to be working on this together in class. You're going to be doing some research for homework to get ready for when we start talking about leases. Okay? And that'll be on Connect, and I'll have all that up for you. All right. Any questions on anything?
So you're going to send us what we have to research? It'll be on Connect. And you can upload it to Connect. Okay. I'm going to try to go get all that done right now, so that way it's all set for you. All right. Any other questions? Okay. Cool. I will see you on Thursday then. Good job today. Oh, let me stop the recording here.